Wish I had hair and makeup.
I wish I had hair.
Fix me up.
Not yet. The budget's not there yet.
Yeah.
We're waiting on the budget to go up. I've seen a lot of agents have like podcasts, but I've never like actually watched them. I think I've seen clips, and I'm just like, everyone talks about the same thing. Like, I think a lot of them just talk about like mindset, and it's important, but nobody tells you like like actually tell me.
Like as far as like what to do to get to like the next level and stuff like that.
Like that, and also like just regular questions. I don't think I've seen like a lot of content about it. I think like a few mortgage channels, but I usually just see like very vague.
Yeah. Yeah, I feel like they just try to do it to fucking get clicks and get like the most what's it called? The most views. The more vague, the more views they can probably get, you know?
Or the more like, hey, what does this mean? Tell me.
Yeah.
Yeah.
But I mean, it's a good start for us though, I think. Just kind of. So, do you want to go like your 21st and then my 20, or how do you want to do it?
Yeah, let's do that.
All right. So you want to start off like, hey, we're here.
That was the start.
That was the start? Ah,
that was the start of the podcast.
Shit. Okay, cool. Okay, so, all right, let's just start off with the question. All right, Rodrigo, so how is the local real estate market right now?
So I think that it's not as hot as it used to be. I know now with the offers, you don't have to write them as strong contingencies wise, just because there's a lot of less people. I'm sure you heard of like the NAR lawsuit where a lot of buyers agents are not going to get paid commission. So that already took out like a lot of people. I think I heard over like 30 to 40% of agents aren't renewing their license.
This year? Or this upcoming year?
This year and this upcoming year, like a lot of them are getting out of the business. So, I mean, that just goes to show you that agents are even more important. But the market, there's a lot of people interested in buying. There's a lot less sellers. So I would say whenever you're personally ready is a good time for you. Like regardless of what's going on, if you could afford the monthly payment and if you have the money to buy, it's a good time because you could always refinance out of that interest rate that we are in.
So I don't know if we have this question on here, but you did say that you don't have to put as strong of an offer anymore. So in your eyes, what was a really strong offer before, and what's a still a strong offer but an okay offer now?
I think before I was writing offers like 7-day inspection, 7-day appraisal, 7-day loan, and then 21-day to even 17-day close of escrow. So that was like a really strong offer, especially if you weren't able to just outright buy the contract. Like if a house is $500,000, you're not offering $520,000 or $550,000 just to get it. You could still offer like $505,000, $510,000, and then now I would say I write them like 7-day inspection. That's the only one I could control, and then an appraisal 10 days, loan 10 days, and then 21 to 30-day. I was talking to an agent that I'm in a deal with, and she was saying that she got an offer accepted at a 45-day escrow. I'm like, 45 days is just insane.
That's
like
crazy.
I don't think I even asked her because I'm the one that's buying her client's house and she's helping her clients buy a house down the street. She was like, yeah, we did 45 days, and I'm like, we did 21 days.
But that's the one we're in right now, though.
That's the one we're in right now. So I'm like,
that's insane.
I'm like, why is it gonna take you 45 days and then an additional 7 days to move out? I was like, it's down the street. Do they need the 7 days?
Honestly. Well, do you think that the other buyers are moving out too? Like, do you think, because the buyers we're buying a home from, or the sellers we're buying a home from, they're trying to find their house. Do you think that next people trying to buy their house, or selling their house, are trying to buy it?
No, it's non-contingent, so they don't need to sell their house to buy another house.
They just need us to close first.
Yeah.
And then, so maybe they're not. They're banking. They think we suck. They think we're slow. That's why they're probably doing 45 days.
I think they're slow. 'Cause they even asked us to like give them the $2,000 EMD. That's right now. So I first told her like, let me know what your clients say credit wise, because they also need to drop the price by $2,000. But I'm gonna tell her we're not gonna give her the $2,000 because if we release that, if we don't close, they're never gonna get that money back.
Yep. Could you write an addendum saying like, I know this is off topic, but could you write an addendum saying like, hey, like if we don't close due to you guys, we get that money back to us, or how would that work?
I mean, you can write an addendum for anything, but once that money is released from the escrow account and it goes to them, it's going to be really hard to get that $2,000 back if both of us fall out. And we're going to probably gonna have to go to court. And I wouldn't do that to a client. Like, that's $2,000 that they earned and they put to that house.
Yeah.
And these people can't borrow it from somebody, get a gift from somebody.
Yeah.
Like, I'm sure they know somebody, at least 1,000 one person, 1,000 another person. So it's
Or how do they not have $2,000 at all?
yeah.
That's insane to me. And then you're trying to buy a house?
Yeah.
That doesn't make sense, brother. But so we're in Whittier right now. Do you know what the average price of a home is in this area or in LA County?
LA County, I know it's about 690,000 to 700,000. It just depends on how sought after the area is. I know you could get into a house for as little as 450,000 in the city of Los Angeles. It's going to be a 2-bed, 1-bath. It's not going to be the nicest house. In Whittier, I know a lot of people like moving to Whittier, to Downey. So these houses do tend to be a bit more expensive. I would say starting at 720,000 to 750,000.
Man, Whittier's nice. It's pretty nice.
It just doesn't have freeway.
That's the only thing. We're moving to Whittier. Just be ready for no freeways.
Yeah.
Takes 15 minutes and then wherever you're going. Shit, that thing's crazy. So how long do homes typically stay on the market in, let's just say, LA County, after what you just said, that, you know, the economy, not the economy, but the market's probably softened? So what's the average time a home stays on the market?
I know I checked it online. There's this website called InfoSparks, and it gives you all the information. It says right now like 15 days.
Dang.
I don't think it's 15 days. A lot of the houses I'm seeing, if they're not priced properly, it's about 30 to 40 days.
Yeah.
If it's a hot house, renovated, and it's below market price, obviously everyone tends to go towards that house, and then they just put the price up.
What would you say would be better? I don't know, this isn't even a question on topic, but what would you say would be better? Would you rather list a house? Let's say the house is worth 700. Would you rather lowball it, list it for 6, or list it for 700 or 750,000? What would you rather do in the market that we're in right now?
In the market that we're in right now, I think I'd rather, or any market, we listed at 690, 699 and try to get the price up. Or even I've seen houses that are listed super low, like for example, that house is worth 700,000. We listed at 599. It's going to be crazy.
Right.
There's going to be a lot of people wanting to see that house, especially if you do open houses for an extended period of time, like let's say 4 hours Saturday, Sunday, and even Monday. Have like sweets, donuts, coffee car.
Yeah.
That price is going to go up. But at the end of the day, it doesn't matter like what tricks you do, what you do for the open house. A house is only going to be going for what it's worth and what people want to pay for it.
Right.
So
That's true.
If it's in a nice part of town, if it's a nice house, it's going to go for a lot more than a nice house in an ugly part of town or an ugly house in a nice part of town.
So, speaking of in a nice part of town, what city do you think it's the best to buy in LA County?
The best city to buy in, I think I'm a little biased. I would say it's Downey. I would say it's Downey.
That's right.
Downey.
Born and raised, baby.
Downey or Whittier.
Whittier.
But I think if you're a first-time home buyer, I would say Lakewood's a good start. It's a really good start. Or
Lakewood's really nice.
Long Beach. There's some houses in Long Beach you can get them for really cheap.
Yeah, just depends on what side.
Well, not cheap, but less than what you would get. Like over here, you could probably get something for like, you could get a condo for around 400 to 500,000.
In Long Beach?
Yeah.
Dang. Okay. What, like North Side?
Now, actually, pretty close to the beach, like kind of central Long Beach.
Oh, dang. Okay.
I'm showing condos on Saturday.
Okay, nice.
Yeah.
To who?
This girl named Ciamara.
Okay, nice. Oh yeah.
Yeah.
And Long Beach has like 400. What's the HOA looking like?
It's 250.
Oh, that's actually
that's not that
really
bad.
good. Yeah.
That's not that bad for HOAs. I've
Yeah.
seen crazy HOAs.
Dude, I've seen like $1,000 HOAs in like LA.
Yeah.
It's insane.
I know what building you're talking about.
Yeah, man, it's crazy. Okay, cool. So, can you provide a CMA or a comparative market analysis for my house?
Yeah. So I know a lot of times people before an appointment or even when I'm talking to them and they showed some interest wanting to sell their house, they say, I already know what it's worth. And usually they're going to say, Zillow and Redfin tell me what it's worth.
Yeah.
And that's not true in 100% of the cases. Sometimes it's pretty accurate, but even like the owners and founders of both websites have said they're about 40% off.
Dang.
They compare, like, they don't compare apples to apples. They compare to everything in the area.
Okay.
So if your house is, let's say your house is new and the square footage is a little bit bigger than the average and there's no comps, they're gonna say, hey, it's worth this, and then when I do it, it's about $20,000 off. So
Okay.
if you list at what Zillow's telling you, most times you're probably gonna leave some money on the table.
Gotcha. So would you say Zillow just goes based off of square footage and not actually room size, or?
I think Zillow just goes based off similar houses.
Okay.
I don't think they go out based off of square footage. I know when I do my CMAs, I do within 1 mile. Like, let's say if we're in Whittier right now, if let's say this is a house, I go off of a mile radius to active houses.
Okay.
Houses that have been expired, and also houses that sold within the last 30 to 60 days is the sweet spot.
Okay.
Based off square footage, and I also go based off, let's say this house is a little bit smaller, and there's another house that's bigger. Like, let's say it's 1,400 square feet, and this house is a 4-bedroom. The layout's gonna be small.
Right.
Right, and then if it's a 1,400 square feet 2-bedroom, it's gonna be a lot bigger.
It's gonna feel bigger.
It's gonna feel bigger as
Yeah.
well.
That's good. Okay. Were you actually gonna do like a CMA for that?
What?
Like the CMA? Because I'm sorry, the way I asked it, I thought it was like you were gonna do a CMA of like my house.
No, I just.
And that's what it says here, like for my home. So I was like, can you do it for my
okay.
house? You're like, yeah. I was
Yeah,
like,
but
"All right."
anyone that's interested, I could do a CMA on their house.
Okay. Okay. What if I was thinking of listing my house? What should I do to prepare my home for sale?
Okay, so a lot of times, like, people paint their rooms, like, let's say you have a little girl, you paint her room pink, purple. I would say paint the walls white, just primer. It's not that expensive. The landscaping is important. Like, if there's a lot of like bottles, recycling bins, like, people are not gonna like that. It doesn't have good curb appeal. I would say mow the lawn. It doesn't have to be expensive, and then just tidy up the place and try to make your showings accommodate like anyone that's interested. I'm not saying show them like all the time. Like, have Saturday and Sunday, like, go out with your family, go look at houses if you're buying another house. But just let people see the house, because I showed a house. It was like in the middle of nowhere, Agua Dulce. Like, it's been on the market for like 300 days already, and we tried to see it. They weren't accommodating. Like, we drove like, I think it was like an hour and 40 minutes just to see it.
Damn.
We were looking at other houses, but they didn't want to show it to us. And then my client was like, this is why nobody buys it. They don't let anyone see it.
And people expect, it's not like when it was during COVID, people would just do drive-bys and like you could just submit an offer. Like, you have to let people see it. And I guess mainly like, it's just mainly cosmetic stuff is what you would say.
Yeah,
just
mainly
like,
cosmetics.
Just do all the cosmetics, make it look pretty. Like, when you go on a date, you're selling yourself. You know what I
Yeah.
mean? You look pretty. You don't go on a date looking like a bum.
Yeah,
you know what I mean? They see you for the first time. They're like, all right, like,
Yeah.
you're looking good. You know, like, people think they're just gonna sell it. Like, bro, you're just leaving thousands of dollars. It's gonna cost you maybe what, $1,000 if that,
Yeah.
a couple thousand maybe if you do the paint job, fix all the grass. That $1,000 is gonna bring you tens of thousands. So it's just
Yeah.
like a small investment. And if you're working with the right realtor, like, they'll tell you, all right? Some realtors just fucking, oh, go ahead, it's fine, just do it.
Also, sometimes like I know that if people are, let's say you're thinking about selling your house within this year to next year, you want to get some work done. A lot of people are like, oh, I need to fix this, I need to fix that. I'd rather you get on the market and then credit them some money to fix the thing than to hire the wrong handyman, because that's just going to cost you a lot more money.
Yeah.
I know that the deal we're in Palmdale right now, they said they got a new roof. We had an inspector go, and it was like a Spanish style roof, one little area, and then like a different type of roof this area. So it just looks ridiculous, and then we're gonna ask for a lot more because it's gonna cost to take that out and put the right thing. So you don't have to spend a lot of money on the roof or anything like that.
Yeah, because how much you think fixing a roof is? I don't know if you know off the top of your head. How much you think fixing the roof is versus how much you think you would credit someone back to fix their roof once they buy it?
I think if you're gonna get a new roof, it's between 20 to 40,000.
Okay, and so would you say that you would credit back the buyers if you're selling? Would you credit back the buyers the same amount of money, or do you think you credit them back a little less than that?
You would credit them back maybe like 5 to less than 10,000.
Dang. Okay, but if it's foundation, is it different? Like,
if it's foundation, a lot of times like people run away from that. Like they don't want that problem.
yeah,
A lot of times there is some foundation cracks if it's an older house, but if it's like major, like I tell my clients like, hey, this is your decision, but I would run away from this.
yeah. I've actually had two in the past like 5 months. We're both like two escrows with foundation issues.
Oh, wow.
One of them was major, where it was like 50 grand to fix, but then after that, now the buyers have a brand new foundation, you know? But the other thing is like, once the sellers know they have a foundation issue and there's a foundation inspector, like they have no choice. Nobody else is gonna buy it. So it's like either you gotta cough it up or you know, you're not gonna sell it, or someone will buy it, but I'm pretty sure nobody's gonna wanna.
It's gonna be an investor. They're gonna lowball and they're gonna want.
Yeah.
The money you could credit them back, even if it's 50,000.
Yeah.
Is gonna be a whole lot less if it's an investor, because an investor will lowball the hell out of you.
Yeah. Yeah. I mean, they need the deals. And then the other one, same thing, little foundation issue. Theirs wasn't as major. It was only like 10 to 15 grand. But I mean, if most of the sellers are willing to fix the foundation, then I think it's a good deal on both sides, you know?
Yeah, they kind of have to work with you, because let's say you fall out of escrow and then I show my clients, their agent has to legally tell me, hey, we fell out because of foundation issues.
Yep.
And we're going to be like, all right, let's not even look at this house.
Yeah, exactly. And yeah, that's the good thing. Let's see. What are the costs? Okay. So what other costs are involved in buying and selling a home?
It's 3% conventional first time home buyer, or you could do 3.5% FHA, or you could even do 10, or honestly you could do as many percentage, but anything that's not that is going to be the home inspection, and then the appraisal are going to be like the only things out of pocket besides the escrow payment that you're going to have to pay, and those are the only two things that you can't get back.
Right. And then what about when you sell the house? What other costs are there when you're selling?
When you sell a house, it's typically more expensive. Like you got to pay for the NHD, which tells you like the natural hazard disclosures. Like, is it an earthquake fault area? You're gonna have to pay for your escrow, like your side.
How much is escrow? Is it like 2% on your side as well, like how it is when you're buying, like closing costs?
I think it's closer to like 2.5 to 3.
Okay, for the sellers, 2.5.
Yeah, for the sellers, it's a little bit more expensive. Yeah, and you got to pay for the transfer fees for the title. And just, I'll list all these things down below. There's a lot of stuff.
Does it change the fees if, let's say, I sell a conventional or I sell FHA? No. Does it change, or it's still the same?
It's still the same. Yeah.
Okay, that's good. Good to know. How do you determine the listing price of a home?
I do the CMA and I run comps, and usually I try to go with like the lower one, just so I could put the price up. I don't want to promise my clients like, hey, I have it usually tells you the average and the medium, right? I usually take the lowest one. I'm like, hey, this is how much I think we should list it for.
Okay.
These are all the houses that have listed higher and are still on the market. So if we want to get more eyes on your particular property,
Right.
let's list it a little bit lower so we could get more people, and we'll drive the price up.
There you go. Draw more attention.
Yeah.
And then make it a hot property.
Yeah.
Genius. Genius. Okay. What is the process? Like if I'm buying a property, what is the process of making an offer on a house?
So the first thing you should do is get pre-qualified. You could get pre-qualified.
The GOAT. Angel City Financial.
Get pre-qualified so you can know how much is in your budget, how much you can afford on a monthly basis. And then writing up the offers is going to be after you take a look at the houses. I have a video on the entire buying process. It's going to be up here in the little thing. But you basically put all your terms. It's a formal indication that you're interested in it. And then, like I said, watch the video. And then if you have any more questions, like I already covered that.
Oh, you're going to link the video.
Yeah, I'm going to link the video.
Watch the video.
It just goes more
I
in detail.
made that shit already.
Nah, it just goes into detail.
That's funny, dude. Okay. What should I look for during a home, or what should a buyer look for during a home inspection?
During a home inspection, the most important stuff I would say, make sure that the plumbing is good, the roof, and then the foundation. Okay. Anything else is just pretty minor. Okay. Electrical, if you're gonna get a whole new electrical panel, it's not that expensive. It's $5,000
for a brand new.
Yeah, for a brand new one.
But that's like an average one, or is that like a top of the line, $5,000?
I think that's a good one, and it's average. It's not like the top of the line one.
Okay, gotcha. All right. How much should I expect to pay for closing costs?
For closing costs is about 2 to 2.25, but we usually estimate it's 3%, just so there's no surprises when a buyer is buying.
Gotcha. Okay, and then can you recommend a reliable mortgage lender, home inspector, and contractor?
Yeah, so I usually work with Danny. Most of my deals are done with Danny. We've done a lot of deals together. I like the way he works. Home inspectors, I usually give them like different options, as well as any other like vendor. I usually give them multiple options and they choose.
And then so contractor, same thing.
Contractor, same thing. Yeah. Anything you need, I could get it for you.
Heck
and
yeah.
recommend.
One stop shop, baby. You hear that?
One stop shop.
One stop shop, Rodrigo. What are the common contingencies in a offer when you're purchasing a home?
In an offer, it's going to be the appraisal, the loan, and the home inspection. Okay. So those are the three things that protect your earnest money deposit. Once you say, okay, once all these are met, if you don't close, you could potentially lose that EMD, which is about 1 to 3%.
Yep. That's big money. Don't lose that.
Don't lose that money.
Okay, and then how do you negotiate? So one thing is Rodrigo gets a lot of closing costs for our clients all the time. It's one of the big things I sell the clients on because it's honestly the truth. And every deal, day in, day out, we see, he always does it. So how do you do it, and how do you get the best deal for your buyers or your clients?
I think a lot of it is honestly just with the inspection itself, really. Like it's not difficult. I would say, like, if there's something wrong with the house, most people are not going to want to buy it, even though, like, I tell them, hey, you're not buying a new house. Everything's not going to be perfect. And even in new houses, a lot of stuff is done with like shoddy work, bad work.
Mickey Mouse, yeah.
Yeah, Mickey Mouse. I would say just let them know, like, hey, if there's something wrong with the house, we're gonna try to get you some credit back. Usually I ask for more than what my client really needs. Gotcha. So then that way when they counter me with 3, like let's say I ask for like 6,000, they're like, nah, you're ridiculous. I'm like, hey, we need some money back because these are the things. I'll give you 3. I'm just like, I wanted 3.
Oh, you wanted 3 originally, so then you're like,
3, yeah.
Got him.
I usually ask for more because everyone wants to feel like I got the upper hand on this deal.
Yeah.
It's fine.
That's pretty ridiculous. But I mean, and that's how he does it. Don't steal his tactic.
Trademark.
That's how he does it. But no, it works. It literally works every time. It's a good selling point too. So I think that really helps. And the clients are happy. They get whatever they need repaired. And then Everybody walks away happy. The sellers even think they got a steal. So I think that's the best. So what sets you apart from other realtors?
What sets me apart from other realtors? I think I'm willing to get the deals done for you. If I need to give you some money back out of my commission, like in order to make you happy, I'll do it. Like I'm not here just for like the short term. I think in the long run, eventually that money will come back to me and double or triple. I would say anything that you guys need, I am willing to accommodate. I work with you. I don't work like you don't work for me. None of us is hired. Like we're on the same team here, and I'm gonna do whatever it takes to get you to get the home of your dreams, as well as like all the terms that you want. And then even after the deal, like I'm starting to do this satisfaction guarantee now, especially with listings. I'm gonna say, hey, if the house you buy, you don't like it for any reason, for the first 2 years, I'll sell it for free.
What?
Yeah.
What? That's crazy.
I know.
That's crazy.
I've been reading Alex Hermosil's book. Like a deal's so good, people will feel stupid to say no.
Yeah.
And the reality is, people are not gonna sell in 2 years.
Yeah.
Like they're not, but
I mean, if they do,
for whatever reason,
yeah,
I would do it for free. I'm gonna get the marketing from it anyways, and it's another sign. And the only thing you gotta pay for as a seller is the buyers.
Yeah.
Like for him, and you know, it is what it is. But 2 years guaranteed.
2-year guarantee.
I think most people do like.
Don't miss out. That's crazy, dude. I didn't know you were doing that.
It's a crazy deal.
That's crazy. Yeah. Okay. How if I were to sell, how would you market my property?
You know, like I was saying with the previous one, what sets me apart. So, what I started doing is like I'm gonna door knock 1,000 doors in the area. I'm gonna cold call 1,000. I'm gonna get a landscaping company to do your landscaping for free. Rebecca.
All right,
She's a part owner, so I'm gonna get them to do it for free. The landscaping, Facebook ads is important. Open houses, we're even gonna have like little like stands and stuff, just so they could come and see. We're gonna list it lower, and then we're gonna give you obviously the 2-year satisfaction guarantee, and we're also gonna pay for the legal services. So if there's any like law situations like that, like they're gonna be protected on my dime.
What? Even if there's like any liens?
If there's a lien, like I gotta first in the appointment, I'm like, okay, what are these liens? Because most of the time when there's liens, like I'm not gonna pay for the lien. That's their lien. Like if it's a mechanic, like I'm gonna let them know, like, hey, once you sell, this money's gonna go to this person. Usually, it's like the majority is the bank, and then like any other liens, like what is this? Beforehand. Because I don't want to have any surprises in escrow. Like
that one escrow we had where they had a lien on their property because of the RV in the back. The owner on Norwalk in Whittier.
They had RV in the back.
Remember that they had like people living in the back that had a bunch of crackheads?
Oh yeah.
Yeah, they had like a little lien on their property.
And the garage,
Yeah,
I remember that.
You gonna pay for that?
I'm not gonna pay for that.
Just kidding. That's funny, dude. Okay. What as a let's say as a first time home buyer, what would you say are the most important factors to look at when buying a home?
When buying a home, I would say that you got to be realistic. A lot of times, like if you make $70,000, it's a good amount of money here. Unfortunately, it doesn't get you like that much to afford. First question is, what's your credit score? Okay. Do you have any money saved, and do you have a co-signer? Like the co-signer doesn't need to make $70,000. If they make $20,000 to $30,000, that's already gonna boost up your how much the bank is gonna give you. Yeah. And you also gotta say like, hey, this is your first house. It's not your forever home. Are you comfortable with the mobile home? You can do mobile homes, condos. Yep. Or even if you want to move further out, like Lancaster, Palmdale, Riverside, like you got to be realistic. Right. Yeah. But if they make a lot of money, like they could buy here like perfect.
And some people do.
It's whatever. It's honestly whatever you want. As long as you're realistic and we'll tell you, hey, it's looking like this. Like, do you still want to look in those areas? Yeah. And then it's a yes or no. I
think that's the most important part is just setting the expectations. Like, feel like a lot of people they look at homes and then once they see the prices of homes, they're just like, oh my god! And it's like a lot of times they'll see they'll go like on Zillow or Redfin, they'll see the house and then they'll look at the payment, and the payment that Zillow and Redfin usually give is like 20% down with a sick rate.
Yeah.
And it's like, all right, well, are you the person giving 20% down, 800 credit score? Like, is this gonna be you? No, then you're not gonna get that payment.
I know a lot of times they say like on Zillow, I've seen that a lot of them put like the monthly payment's like $3,000.
Yeah, I was like,
like on an $800,000.
yeah,
house.
are you putting $500,000 down or something?
Yeah.
Dude, it's very unrealistic, and I
Yeah.
think setting expectations and for first-time buyers, just in general, or any buyer, is just the most important thing. Is like you need to know. Maybe you purchased your home back during COVID, and your rate was like a 2%. Dude, rates have tripled, so it's like, and the property prices have gone up, tremendously. So it's like what you bought back then, you're not gonna get again. But just now, you have to be ready. Don't listen to your family members.
Because the thing with those websites, it's not a website to like look at homes. It's really like an information website.
Yeah.
They get your data when you say, hey, I'm interested, and they sell it to agents, and then they basically just sell you a false dream.
Yeah, exactly. Just to get your business or your info.
Your info to sell it to other people.
Okay, and then how could you, or let's say I have a 550 credit score. And you need a 580 to qualify. What would you say is the best way to boost my credit score in order to get ready to purchase a home?
Are you buying by yourself, or do you have like a family member?
I am buying with a family member.
With the family member? So if you're buying with the family member, chances are you trust them. And the family member's credit score, let's say it's a little bit higher. Let's say it's 650. I would say, hey, add them as a authorized user on your credit score, on your credit card, and then their credit will go up because they've seen this list of things that like, okay, he's had credit since, let's say 10 years now, right? Another thing is that when we run your credit, we'll do a soft pull and we'll see like, hey, these are all your debts. All debt isn't created equally. Look at the monthly payment for the cards, and then if you can afford and pay for it to be gone or even fix it, I would say try to pay off that credit card so you don't have a monthly payment. It's going to help your credit go up.
That's good. That's good. And then to wrap up the questions, what are tax implications of buying and selling a home?
So when you sell a house, let's say you're married, Danny, and then you sell your house, you get $250,000 exempt. So let's say you and your wife, you get $500,000. So if you make less than $500,000 on the sale as profit, you don't have to pay taxes on it. But if you make, let's say you make $800,000, you still have to pay $300,000 in taxes, especially if you don't 1031 tax exchange that money and you keep it, because the government is saying like, okay, Danny made $300,000 this year plus whatever he made on his side. Let's say he makes $200,000, so he made a good chunk. He made $500,000. You're gonna get taxed as if you made $500,000.
That's crazy.
That's if you keep that money, the excess in your pocket, right?
Right.
Buyers, it's good to buy because you get exempt. If it's like a duplex, you get to write off depreciation on the duplex. So there's tax incentives, and owning a house actually gives you a lot of leeway with lowering your tax rate.
Right.
Yeah.
That's great.
It's more genuine like that. Okay. What type of loans do you offer?
We offer all types of loans. First of all, I'm on the broker side. So basically we can work with whatever bank we want to work with, whatever bank we're signed up with. So certain banks can offer, of course, every bank pretty much offers FHA, your standard government-backed loans. So FHA, VA, conventional. And then we also have loans that are non-qualifying mortgages, or they're called non-QM loans. So those are like your profit and loss only programs, your bank statement programs, your DSCR programs, your VOE programs, or basically no doc programs, ITIN as well. So we can work with whatever banks we need to, whatever your criteria is, we'll find a way. If we need manufactured homes, we do manufactured homes as well. So And in pretty much any state. So wherever you want to purchase, of course, California, it's better for us, but wherever you want to purchase, you let us know. Again,
Yeah.
whatever criteria you need or whatever kind of loan you need, we can find the bank to get
So
you in the home.
basically, like whatever loan is best for your situation and bank,
Yes.
you're gonna use it.
Exactly. And not only that, whatever the best interest rate that
Yeah.
we can get you, we know what bank to go to. So that's the and just another side thing on that. We have pretty much something that's called it's like a loan sifter in a way. Basically, we put your criteria, we put the banks that we need, that we work with, and then it'll tell us what banks can give us the best rate on what day.
Awesome.
So-
What are the current interest rates?
All right, the average interest rate today is at a 7.17%. So that's just the average 30-year fix. Of course, that's not the interest rates for today. For FHA, we're looking at a 6.25%, and for
Oh, wow.
conventional, we're looking at a 6.625. Now for non-QM, it's gonna vary per product. So if you want to know what that is, just DM me. I'll be more happy to run that scenario for you. But that's pretty much where they're at right now.
Okay, and what's the difference between a fixed rate and then like a ARM adjustable rate mortgage?
Yeah, definitely. So ARMs or adjustable rate mortgages aren't as popular anymore as they were before back in like 2000, early 2000s,
Yeah.
right? With people with a bunch of balloon payments. So basically an adjustable rate fixed or an adjustable rate mortgage will adjust with the market conditions.
Yeah.
Now, a fixed rate mortgage, of course, is what's in the name. It's a fixed rate. So you'll have a fixed monthly payment for the life of the loan. The adjustable one, of course, will adjust as the market goes. So each month it could vary, or each year it could vary on
And you
how
could
the market is doing.
refinance out of any of them.
You can refinance out of anything.
Okay. And then how much down payment do I need to buy?
So it depends on which loan program you're going with. You can put as little as 0% down, right? That's with your down payment assistance programs
Or VA?
or VA, right? So you have your down payment assistance VA. You can put as little as 3% down if you're a first-time home buyer for conventional. You can put as little as 3.5% down for FHA, and you can put as little as 3.5% down for a profit and loss statement program. So if you need that, let me know. I have that as well. But besides that, after that, it varies, right? You can go 5% conventional, 10% non-QM, 15, 20% non-QM. It just depends on what program you're going with. But as little as 0% down if you don't really have much in the bank right now.
And then what credit scores do I need in general just to qualify?
Just to qualify, if you need FHA, which is your standard first-time or typical first-time home buyer program, you just need a 580 credit score to qualify. Of course, you're not going to get the best interest rate, but you just need a 580 to qualify, right? But I definitely recommend a 620. Now, for conventional, all you need is a 620, but I definitely recommend being closer to 700, 720, 710, around there. Just again, more competitive interest rate, better monthly payment for you.
Okay, awesome. And then how do I get pre-approved for a mortgage?
Definitely. So again, I always say, depending on which loan program you go with, right? But of course, we're going to need to run your credit, right? So we're going to need your social, we're going to need your ID, your date of birth. We're going to need income documents, depending on which income documents we're going to go with. Or we can use your W-2s of 2 years, your taxes of 2 years, your pay stubs, if you have pay stubs, and then your bank statements. We're going to need to check, verify how much you have in the bank in order for us to go ahead and approve you.
So what's the difference between a pre-qualification and a pre-approval?
So pre-qualification is us just basically running numbers, right? So we can go based off of what you tell us. Like, let's say I ask you, you tell me, hey, I make 120, 140 grand. This is my credit score. This is how much I owe. This is how much I have in the bank, right? I can pre-qualify you and tell you like, hey, this is how much you're qualified for, right? But getting pre-approved is actually when we run your credit. We do a hard pull on your credit. I verify all your income documents. I look at all your bank statements. And then I run all that information in through what's called an automated underwriting system, or the AUS. And that will give us a DU. Will tell us, hey, if this person is approved for this amount or if they're not, right? So once we get that automated underwriting system approval, that's when you're pre-approved.
And that's when you can start actually
Yes.
going to see houses and presenting offers. 'Cause
Exactly.
If you're a realtor and you're just starting out, like don't show houses if someone's not pre-approved.
Exactly.
At least maybe like one time is fine just to get them to trust you a little bit because I know a lot of people don't want to give you their documents. Hey, let me just see one house. But
Yeah.
if it's more than one house, like you're wasting your time.
Exactly. And that's the thing too, is you want them to kind of get the ball rolling. So once they go see a house, I think that's always a good sign that they're at least putting some skin in the game. They're like, okay,
Yeah.
I'm willing to go out there and look. And then once they send the documents, that's when you know they're pretty much ready to go.
Are there any first-time home buyer programs that are like incentives besides FHA?
So typically, down payment assistance, they usually require you to be a first-time home buyer. So if you want 0%, or there's one that we just got signed up with. This is the Santa Ana one. So if you're in the city of Santa Ana, you can get up to $120,000 down in assistance with the 0% interest paid back, and it's a 45-year grant or silent second. So you don't have to pay that back for 45 years with zero interest, which is pretty insane. So that's first-time home buyer incentives.
And just to be clear, like if let's say I own a home and I sell it, and then in 5 years later, 10 years later, I'm still a first-time home buyer, right?
Exactly, yeah. So I mean, typically, I think the amount of time you're supposed to not have any ownership interest is 3 years.
3 years.
Then after 3 years, you're technically a first-time home buyer again. So, and then the other thing with being a first-time home buyer, let's say you're buying conventional, right? There's loan level pricing adjustments. Basically, your interest rate changes. There's a little adjustment if you're not a first-time home buyer. So if you're buying conventional, first-time home buyer, you get a better rate for that program. So
Awesome. And then how do I qualify? Is it the same pre-approval process to qualify for like FHA, VA, USD? I know with VA you have to be, you have to have served in the military.
yeah, so qualifying with VA, to be honest with you, their guidelines are a little more lenient. But of course, you do have to be a veteran or an active military member right now, or a spouse. So that criteria is a little more lenient. Their credit score doesn't have to be the same like FHA. You can even have a lower credit score. Your debt to income ratio and how much you qualify for could even vary as well, because they have a different underwriting system for VA, so, or underwriting guidelines. So you can qualify differently for VA. Now USDA, you have to rural area as well. To be honest with you, I don't do too much USDA loans, but
There's not a lot of rural areas around here.
not a lot of rural areas in LA County, so I really don't work too much with USDA. But yeah, I mean, not much of a difference besides the criteria. Like you still use same income documents, still credit reports, still bank statements. It's all pretty much the same. It's just different guidelines for different programs.
Okay, how much can I borrow based on my income and credit profile? How much would I qualify if I make 70,000, credit score 700?
700 credit score, and you want to put how much down? 5% down. So if you're putting 5% down, I would recommend going conventional. Although your credit, it's at 700, it's still good, but I would recommend maybe getting up to 720, or if not, we just go to FHA. But let's just say you make about $70,000 in gross income. Altogether, you could probably qualify for a house at about $350,000. So maybe a condo in Long Beach.
Condo.
Maybe Long
Then
Beach
you could always just get a co-signer to help you a little bit more.
Yeah.
Okay. And then what are the different loan terms? Like, is there just like 30? I know that there's 15. Could I do like a 27?
So yeah, I mean, you can switch it up to whatever, pretty much any loan type, depending on what bank, right? Different banks offer different loan terms. But yeah, you can even do like 10, 15. The typical one's 30 though. Everybody usually does 30, especially when you refinance.
Yeah.
Most people will do 30 just to reset their payment. So of course their payment drops down if they've been paying for 10 years. Now they get a better rate. Payment goes back to 30-year term. Now they're paying a much cheaper monthly payment.
That's what's important, the monthly.
Exactly.
So what is private mortgage insurance, and do I need it?
So private mortgage insurance is insurance for the bank, right? It doesn't benefit you as a borrower. It's just in case you default as the borrower, the bank has this insurance, right? So The closer you get to 20%, the less you have to pay it. So upfront mortgage insurance premium is for FHA. Private mortgage insurance is only for conventional. So private mortgage insurance is gonna be if you don't put 20% down. So if you buy in conventional anything less than 20, you're gonna have private mortgage insurance.
Okay. And then can I lock my interest rate, and if so, for how long?
Yeah, definitely. Great question. So once you enter escrow, right? Then we'll submit your loan. Then we'll talk to you. Like if we think it's a good day, hey, we should lock your rate in today if you feel comfortable with this monthly payment. So you can lock your rate for as low as I believe it's like 9 days or 7 days, up to like 60 days. I think it is. Yeah. So and the more important thing with that is, let's just say how we were talking about someone that's taking a long escrow, right?
Yeah.
Let's just say interest rates are favorable right now, but we can't close escrow until they close escrow, right? So I would recommend us locking for 45 days because we don't know if exactly they're going to lock in 45 or if they're going to be done with their escrow in 45 days. So we can't even close on ours because they haven't closed on theirs.
Yeah.
So I wouldn't recommend doing 45 days. I would recommend maybe doing 60 because let's just say we get to that 45 days and then we have to do what's called a relock. So we have to relock, which basically means we want to extend the interest rate we have an extra couple of days, right? So we're going to keep that we're going to keep that same interest rate for an extended period of time until we know we're going to close, right? So that costs money. Each day that costs money, depending on what interest rate you have and depending on the purchase price, right? It costs a certain amount of dollars per day, right? I've taken the bullet on a couple of them. They weren't my fault, but of course I'm not going to have the buyers pay $1,000 for an extra week, you know?
Yeah.
When it was something that was out of their control, it was actually the bank's fault because they were messing up. But ultimately, I'm the one that works with the bank.
Yeah.
So ultimately, I'm going to bite the bullet on that because it's not, again, it had nothing to do with the borrower. So 1 week was $900, right? So it's a pretty penny, right? So it can be, and it happens sometimes, you know, you think you're going to close a certain day and you don't. And it's just, you got to relock. So unfortunately, it's just something that happens, but try your hardest not to relock.
So what happens if my financial situation changes during like the buying process? Like,
yeah, so I mean, it depends. Like if we're in escrow, it's like, oh, well, how bad did it change? How drastically did it change? Right? Will you not qualify anymore?
Yeah.
Then it's a big deal. Let's just say, hey, maybe you're switching jobs. Okay, if you're switching jobs, but you're keeping the same pay or maybe even getting a pay increase, it's not a problem as long as you will be getting your first pay stub before the month or before your first payment is due for that property.
Got it.
Right? So, or if you have an offer letter saying, hey, this person's going to make this much money, it doesn't matter. But if you lose a job, well, it's like, hey, man.
You're basically done.
Yeah, you have no income unless you're gonna find a new job and get paid before your first payment is due. Then it's all right. And it's in the same line of work. But if your credit score drops, well, hey, your interest rate's gonna go up, right? It just depends on what the situation is.
Okay. How do I compare loan offers from different lenders? Like, what should they look at?
So, the one thing you want to look at is interest rate, right? Are you paying for the interest rate? Are you not paying for the interest rate? That's the number one biggest thing. I would say the second thing to look at is mortgage insurance, right? For FHA, it's going to be standard, same mortgage insurance wherever you go. It doesn't matter what you do there, right? But other banks with private mortgage insurance, they offer different rates or different payments on the mortgage insurance, right? So let's just say maybe you're getting a better rate. Let's just say you're getting a 6.5 somewhere and then a 6.625, but your mortgage insurance for the 6.5 is like $250. And then your mortgage insurance for the 6.625 is only $100, right? There's one thing to look at is just your mortgage insurance. So don't look at just the interest rate, look at what your monthly payment is.
And don't you also have to look at, like, I know some lenders, like some bad lenders, they charge like extra money like in the closing costs.
Yeah.
Right?
Yeah, so that's what's called origination. So always look at origination, right? If the origination isn't matching up to the lender credits, then you want to see, hey, like, am I paying for this rate? It's just, that's the number one question. Am I paying for this rate? Yes or no?
Yeah.
Then you'll know if they're honest, if they're not honest. Then you can be like, okay, this person's not being honest with me. Who knows what else they're doing, right?
Yeah.
So,
because a lot of times I know that you've seen that you look at somebody gets qualified with the lender and you look at them, you're like, oh damn, why is this one like for everything after the EMD? you're paying $40,000 with me, but this person's charging you 60. Like,
Yeah.
What's the big gap there?
And it's just sometimes it's just their rates, man. Their rates are just terrible, to be honest with you. Most of them are direct lenders. Like,
Yeah.
and I'm not talking down on direct lenders. Just most of the time, direct lenders don't have the best rates, and that's just nothing to do on
Them, it's just the
nothing.
bank.
Exactly, it's just the bank. They're most likely trying to give they're trying to give the person the best they can give, but it's just unfortunately it's not the best what's out. It's not the best that's out there.
Yeah.
That's what I'm trying to say.
And do I get any penalties for paying my mortgage off early?
No, again, it depends on what bank, right? But most banks, they don't have a prepayment penalty, and that's what you have to check when you're signing loan docs, and then when you're deciding what broker to work with. Then you can say like, hey, is there a prepayment penalty if I'm paying this early? Most of the time, there's not, but you just have to see with what bank you work with.
Okay, and then how does the underwriting process work?
So the underwriting process is different for whatever bank, right?
Yeah.
Some banks are more lenient, some are a little stricter than others, but pretty much what underwriting is I pre-approve you, right? And I look at your documents and I say, hey, look, this is what you qualify for. This is how much you can purchase for, right? So when that happens, then we get into escrow, then I send it to the bank. The bank then reviews everything that we have, and things pop up, right? So sometimes some underwriting conditions is what it's called. They'll condition you, is they'll say, hey, like this person is on a trust for this property. Do they have ownership interest?
Yeah.
If they do, then it's like, oh, hey, like this popped up. Okay, can you explain it why? So you just need to explain to the bank, oh, yeah, I have ownership interest or I don't. Depends, right? Oh, hey, I'm missing one bank statement. Can you send me another bank statement? Hey, this person's pay stubs are a little out of date. Can you send me pay? So basically what underwriting is they're just verifying all the income that you said that you make and all the bank statements, and pretty much just everything you wrote on the application is true, right? So once everything is approved, once the underwriting is complete, then you'll get what's called clear to close. And basically that just means, hey, everything looked good as far as the loan goes. We can go ahead and close on your property and you're approved for the loan completely.
Okay. So last question. What should I avoid doing while my mortgage application is being processed?
Yeah, definitely.
I'm going to start off by saying, I know, don't buy a car, don't get a new line of credit. But
Yeah.
is there anything else?
That's pretty much it. That's the main thing is like, don't mess up your credit. Don't open any new loans, because that'll just mess with your qualifications. So, and then that just segueing into messing up with your qualifications, like don't move jobs, don't work less. If you're purchasing a home, yes, maybe you have to go and take time off to go look for a home. But if you're not working your full 40 hours for like a month before or a month during, and you take a vacation, like that could mess up your qualifications, because then the underwriting or the underwriter can be like, hey, like, why is there not full time, right? And then it's like that can just open up a whole can of worms that we don't need to go through, right? So those are the two main things. I think the other thing is don't lie.
Yeah.
Like don't lie to me. Like I'm on your side.
Yeah,
like
just tell him everything,
Yeah.
and then we'll figure out a way. Okay, how can we get past this? How can we do
Exactly.
this? How do we explain this? Okay, you're not working. What happened? I'm injured. I get workers' comp. I'm gonna go back to work.
Exactly. Like you try to hide it from me, and that's fine. You'll hide it from me, but the underwriter's gonna find it out. Like the underwriter will find out, hey, look, what's going on with this and that. And then if I have to figure it out, and then I have to go and speak to your employer, I have to figure it out some way, then the truth's gonna come out, and then I look like a dumbass to the bank, and then now we have to figure out this whole thing. So be honest with me. Like one time I had a client, they made fake pay stubs, and I sent the fake pay stubs to the bank, and the bank's like, oh, show me the deposits of this. And I was like, all right, show me the deposits. She's like, oh, another lender told me to fake them. I was like, bro,
Don't fake anything. Like,
don't fake anything. Like, I'm gonna send it in because I think it's real. Don't fake anything.
Don't fake anything, because we're not gonna lose our license for you. We're just gonna drop you.
Yeah, hey, I didn't know anything about it. That's on them. And yeah, I mean, that's pretty much it, dude. Like, just be honest with me. I'm not. What's the worst I'm gonna do?
Just be honest. We're on the same team here.
Yeah.
So that's pretty much it for the questions.
Yeah.
Leave a like, comment if you want. If you have any more questions yourselves, and then you know, we'll see you guys in the next video. Hopefully we get, how many likes should we shoot for?
1,000.
1,000 likes.
That'd be nice.
1,000 likes and we'll get another part 2. We're
There
gonna do
you
a
go.
part 2 anyways, but